It's not often you get to speak to somebody who's built themselves a $25 million plus property portfolio. This is what we did on this session, but this is not a born silver spoon in the mouth. This is a rags to riches underdog. This is a person who's a migrant for First Australia, single mum, and GP who worked her way up the ranks and didn't have any handouts or help ups kind of thing. She did this all herself. She got divorced and she shared her inspirational and very transparent and raw and authentic story. So this is one where she transitioned across from residential into commercial. So she talks about that. She talks about how she thinks about buffers. She literally outlines how she built her portfolio to that 25 million. And it's full disclaimer, it's not a overnight success. It's an overnight success 10 years in the making. So I'm pumped for this. This is an amazing session with Anna, with Doctors Helping Doctors Grow, and Steve Felici came along for the ride as a co-host. So you'll see all the tactics, but also get a little dose of inspiration for your property investing. This is a real and authentic property investing story. The reason why Joe and I started Oz Property Investors. Hey everybody, I'm Jeff Miles, and together with Joe Tucker, we created Oz Property Investors. And each week we get to interview the top property experts and also the investors and the raw and authentic stories. We've grown our group to 83,000 property investors, and each week we get to interview the top experts. So this week we've got Anna, a property investor's story journey, and Steve Felici is the special guest co-host. So buckle up and let's crack on. Great question. He said, if you had to start again in today's market, and sort of, have you read the script? Yes. This is some of the question we're going to ask later. Yeah. With prices where they are, would you go into commercial sooner? Or do you think resi is an essential stepping stone? What do you reckon about that, Anna? It's a good question.
Look, if you had nothing like I had nothing, you'd have to go into resi because it's an easier stepping stone. It's easier to borrow at at 90-10 LVR. The banks are more willing to lend you that money. So it's definitely easier. And if you've got time because of age, if you've got time on your side, then the growth will be there. It's such a safe asset. So definitely to build from my deposit, I would go into resi first. But as soon as I can afford it, I would jump into commercial. I don't know whether you agree with that, Steve and Jeff, but as soon as my resis give me the equity to purchase a commercial, and now I know that you don't need a lot to buy into commercial. Little commercial warehouses can start at $500,000 and $800,000. I know because we've helped doctors even buy those little ones as a stepping stone. I would go into that because it's so clear now that the yield, is so good at that, like between 5.5 to 6.5%. It's paying for itself. The risk is so low if you purchase a good property. And I'm telling you, the growth is there. If you purchase well, the growth is there, if not even more, because you're not just relying on location anymore. You've got those inbuilt rental increases that come in with a commercial property that further increase the value of the property even further. Yeah. I have this potent memory of banks and where I started learning that not all banks are the same and not all brokers are the same. If I may share, I know we're segueing a bit, but I remember talking to an ANZ mobile lender one year. This is quite a while ago, and he looked at my pay slips and said, "Anna, really, the maximum that you can borrow is $400,000." Right? My pay slips. And I remember being a bit of a dickhead at the time, thinking to myself, come on, surely there is some merit to me having potential as a doctor despite this pay slip. And so, I decided not to look at $400,000 places as the potential next home. I went bigger. I actually looked at waterfront, and I looked at waterfront. I knew I couldn't afford it, but I looked into it. I was trying to think bigger and looked into it. and found this beautiful place by the water that at the time was asking for 1.2 million. Right?
Definitely not your Wentworthville waterfront property.
It wasn't the Wentworthville waterfront property. Now, listen to me. By that stage, I had heard no shares with BOQ. You haven't banked with them, but back in those days, BOQ was the big medico lending space people. So I gave their broker a call and said, I found this place. I love it. It's actually 1.2 million. This is, I'm an RMO, blah, blah, blah. Do you think I can borrow this amount to purchase this property? Threw in the fact that husband was also an RMO. Would that help? I kid you not, within that same week, I got yes to a 1.2 after someone had said no to a 400. That really taught me. That was a huge, it was another aha moment to just not rely on one broker to tell me what a bank would lend me and what not. Yeah, which bank?
Some of the conversations I've had around that as well. It's very interesting. You just have to say, well, what does the situation need to look like for this person to borrow in this way? And it's actually not exclusive to doctors, lawyers, all the higher earning professions. You can actually then sort of start to say, well, what do we need to change about the scenario? To get even somebody I know who's sort of getting into their 60s and as soon as I thought they were in the 50s and I found out they were 60s, I was like, oh, that could be a challenge with exit strategy. And it's just then saying, okay, well, if you go straight down to your local CBA or whoever it is, CBA is probably a bad example, but they'll say, okay, what is your exit strategy? How are you, and they'll say, well, we'll give you a 20 or 15 or 20-year loan term and it's then just sort of saying, okay, great. What do we, who else do we need to speak to and package that deal as you did with that thing going to BOQ as well to say, okay, here's my scenario rather than you just so that's sort of saying it's kind of whether you're earning whether you're a doctor earning 150 or whatever it is plus a year, or whether you're earning your sort of 70 or 80, 90, there's going to be doors you can go through. It's just what levers can you pull in your portfolio.
You're right, Jeff. No one understands us more than we. Our own story. We've got a story and we've got a reason, we've got a strategy and we've got an explanation for things. And if the banker can understand that story, more doors will open. You just need to tell your story and tell that story and share your ideas and share your thoughts. So you're absolutely right, Jeff. That storytelling piece is so vital. No matter whether you're at buying a $500,000 property or $5 million property, I storytell. I let them know what the story is behind it and where I'm going with it. And it really helps them to make that decision.
So Tim said, what was some of your biggest hurdles to overcome? What did you do to get past these?
In terms of property, I have made mistakes. So two come to mind. The two apartments that I purchased, I wouldn't do that again. They were both brand new. I've had them for close to 10 years now. They've always been rented and the rent has continued to go up with each new tenancy because they're well located. But the growth in them, I've had to wait a long time to see any capital growth in them. So I could not have relied on them to build equity to make more acquisitions. I have thought about selling them many times, but I'm now at the stage where it makes it makes such a small proportion of my portfolio that selling it kind of makes no difference to the overall picture. So that's why I've kept it. But I wouldn't buy it again because it really doesn't serve any strategy. It doesn't grow and it doesn't really give any significant cash flow. So I wouldn't do that again. So that's apartments. So land is all I'll go for. The second thing I've learned is in construction. So my portfolio has had properties that has required an uplift. And one of the biggest lessons that I've learned is to never prepay a builder on their invoices, which is exactly what I did in one of the most costly mistakes I've ever made, which is the builder asked for prepayment of each invoice before he'd carry out that part of the work. and I said yes to it. And then $1 million down, that builder declared bankruptcy, and I never saw that a single cent back. So what's the learning lesson in there? Always pay after the work has been done, and spend money on a quantity surveyor to survey the work and to verify that the work has actually been done before you put out a single cent towards that part of the project.
Yeah. The development's always one, you just don't know what you don't know. Like residential is a few steps, like don't buy apartments, don't buy a good land component, don't buy a flood zone property. But development, you have all that plus just so many other things that go on.
So you started this journey in about, let's just say that's probably 2008 roughly, or is it how many, or is that 2005? What year roughly is this year? 2008, where you started to get a couple of deals under your belt in resi?
Well, I reckon, so this is the graph of Anna being single. So I think that was the time when I had two.
Yep.
So yeah, to work with post-divorce.
Yep.
And then grew it from there. So on my own, I had acquired, another 5, and you can see that it kind of didn't do much for, a good 7 years. So that's one property cycle.
Yep.
So that top graph is the portfolio value. Okay, so that was the value of the portfolio. The yellow is residential, and the blue is commercial, and the green is the total.
Yep.
Okay, so it looked like I had resi up until 2015, and then I purchased commercial.
Yep.
In 2015.
And it was only smaller in terms of commercial as well. Like we're not talking $10 million commercial. It's let's just say maybe $1 million or just under $1 million by looks of the scale.
So that particular commercial property was a residential property that had just been rezoned by council into mixed use. So I purchased that one for $600,000, and then spent probably another $500 to convert it, so that a business could be run out of it, so that the tenants could run their business out of it, because it was a house basically that I then converted. So in total, that would have come to 1.1 million back in 2015. So that was the commercial. So that was the yellow. So you can see I then didn't really, and then it was a slow uptake because I didn't really go hard at it until 2020 when I started putting focus on it and purchase more.
I think one of the cool takeaways here as well, you look from like say 2015, it's a sub $5 million portfolio. Then 5 years later, it's a $10 million portfolio. So portfolio is doubled in value. Then you go another 5 years into 2025, and we're up past 20 million. We're like 23 million, 24 million. And that's the power of compound. It's 5's gone to 10, 10's gone to 20. So over 2 periods, we've actually quadrupled the portfolio. And that's why most salons end up going exponentially.
There was the acquisition in there as well, which did definitely help.
Yeah. Well, again, it's
no. So that's residential. Okay,
yeah.
So what we've not talked about, that uplift occurred because of the PPOR. So I consider my PPOR to be part of the property portfolio that doesn't produce an income. But because I've debt recycled it, pulled on the equity and used it to act as a deposit for investment properties, then that uplift is because I actually renovated my house, had it valued by the bank, pulled on that equity to purchase more. So that uplift is actually the PPOR uplift. Yeah. But this is the powerful one that made me pivot to commercial very quickly. So
orange residential, blue commercial, and then the green again is the total.
Yeah.
For those listening to the podcast, we'll sort of talk to some of the numbers just briefly. but sort of started off in 2015. If you're sort of talking, and you've done it in hundreds of thousands or it's point millions. So your overall rent coming in at 2015 was just under 200,000, so sort of 150,000 roughly. All of that coming from residential. At 2020, that total gross rent was around that 400K mark, which is when you started acquiring a few more commercials. And then now in 5 years later,
no, Jess. So at 2020, that one commercial surpassed my 5 resi.
Oh yeah. But
yeah, right. Yeah.
When did you? Oh, so you've got the first commercial.
2015. Yeah. And then it started increasing, and then 5 years later, it surpassed the 5 resis that were still increasing in rent, but nominal in comparison.
Yeah. And then you've effectively gone from total rent of 400,000 in 2020 to at 2025, you're sitting close 5 years later to close to $1 million worth of gross rent from the properties, which is a big growth, which I suppose is helped by a little bit by the income. And we'll ask that. How do you when people say yes, you're a GP, how do you answer that question when people throw that in the mix?
The question regarding how do you do this on the income that one is on? Is that your question?
Yeah, exactly. Well, yes, they throw shade at your achievements. They say, oh yeah, it's all good and well for you. You're a GP earning tons of money. Like it's great that you've now got that huge 25 million portfolio. How do you sort of handle when people throw that objection at you, that you've only done it because you're a doctor kind of thing?
Yeah. It's a fair question. But like we discussed before, there are a lot of high income earners, doctors or not, who haven't been able to create wealth. And it's because they haven't been strategic in their investing journey. And remember that I built this portfolio over 1.5 decades, starting very early when I was, on $25 an hour, buying small, buying what I could afford, and then building on that. So as my income grew over the years, so did my properties that I had purchased at a low value. So things kind of snowballed with each other. And with that compounding, I could then let it grow more. Yeah.
What are some of the real things that people should take away from this session?
I suppose from my journey, I would say start small, but start early. Remember, my first 5 homes were all under $500,000. Don't be afraid to debt recycle your home. I see my home as another vehicle towards creating wealth. I have non-negotiables, and I never discussed it, but I have non-negotiables when it comes to finance and lending. So this is just me. This is not financial advice. My non-negotiables are that I always have to have an offset of facility or a redraw facility and an offset account. That's what the banks will allow for investments only. So I'm always parking, all those extra repayments into the offset, let it reduce the interest. So I'm trying to balance risk with growth there. Land beats apartments. I wouldn't do apartments again. Apartments grow very slowly, so it's always houses on land that will drive wealth. If I was to do it again, I will always seek places with upside potential. So those that you can buy a granny flat on, anything that you can grow the income while the asset itself appreciates in value. That's how you accelerate your portfolio very, very quickly. You've got to get the income up front and then let time do the growth. And the upside will magnify those 2 points. Construction rule: never prepay invoices, only pay after the work has been done. I try to have a quite a conservative LVR. So I'm going to try and bring it down to 50% again.
Yep.
And I suppose the final point is, if you were to take anything from my story, it would be that your beginning doesn't define your future.
It's a
Mm.
perfect way to end, I think, Jeff.
Yeah.
You can build a financial security with the right strategy and with any amount that you have or don't have.